welcome to the first edition of Indianomics in the new year. We do hope this year sees high growth, low inflation, low deficits, big FII flows, big sensex gains, low bad loans for banks. But we can't be sure of any of these. One thing we can be sure is Indians will bank differently by the time 2016 ends. In a bit, I will be speaking to AJAY, the CEO of Aditya Birla Financial Services, a winner of the payment banker license, on how he sees the banking and payment scene. I will also speak with KK Jain, a maverick entrepreneur whose voteforcash.in sanctions personal loans just by running an algorithm on your phone bill, on your social media presence. But before we meet all these gentlemen, here's a word on what's new in Indian banking in 2016. 11 payment banks will come into being in 2016, many of whom have an evolved mobile telephone network. If each of their telephone account becomes a bank account, then Airtel will have 250 million bank accounts. Idea will have 170 million bank accounts. In comparison, State Bank today has only 55 million bank accounts. Before the year ends, plastic may be passé. We could be paying for our meals like we pay today for our Ola cabs through the mobile wallet. Migrant labor will be remitting money through mobiles. Governments may give scholarships and subsidies through mobiles. The National Payment Corporation's unified payment system will enable us to pay all utility bills through the payment gateway without even quoting our bank account number. Flipkart and Snapdeal may give loans and EMIs to their customers and loans to their SMEs from whom they source products. Several questions rise. What will banks do? Their current and savings account float may fall. They may have to pay more interest for these cheap deposits. So, they may be handicapped in facing up to the new boys. Will retail deposits and loans flee the legacy banks? Will some banks die away, as Gen Next prefers operating with mobile banks rather than with their neighborhood banks? Truly, there's revolution in the air. Well, those are some questions. And to answer them, I met Ajay SRINIVASAN, CEO of Aditya Birla Financial Services. The AV Birla Group is a leading mobile phone service provider through Idea. It also lends in financial services with an NBFC, mutual funds and insurance products. And it has won a payment bank license. So if anyone should know how the banking scene will change, Ajay should be one. Here's a slice of my chat with Ajay SRINIVASAN. The first question really is, when is your payment bank getting launched?
I think we are working to get it done in 2016. I don't think it'll be early in 2016, but clearly a lot of work going on at the moment to make sure that we can launch it in 2016.
When the day you're launched or the day any of the other payment banks launch, you will already be offering a bunch of financial services through NBFCs whom you will tie up with?
Yeah, I think the way we look at the business model is the payment bank, especially when you're working through a telco like we will be doing, gives you a phenomenal highway or a piping system, if you like, to a large customer base. And then it's a question of what products and services you're able to push through that pipe. And definitely a lending product will be a key product to put into that. Maybe a small ticket savings product could be an interesting product. And maybe even a small ticket insurance product could be interesting to put through that pipe.
The NPCI's payment wing, unified payment system, already comes into play. What are you hearing? Will that be up and running before the payment systems?
So we're hearing that that's also moving pretty quickly. So that could come at the same time, could be slightly earlier, could be slightly later. But that is purely payments. And I think the payment bank proposition, I think, is slightly broader than simply payments. I mean, obviously, we're looking at it as a complete proposition from a customer viewpoint. So I don't think directly there's going to be a direct clash.
Okay. So what will be the model of the payment bank? You all expect to make money by getting a commission on every loan you sell?
Yes, because the payment bank itself can't make loans according to the regulation. So obviously there'll be some fee that it'll get, a referral fee equivalent on other products it sells. And obviously the transaction revenue is obviously the key source of revenue that the payment bank will look at. And we're hoping that the volumes will be significant enough to make that a reasonable revenue line.
Remittances will also fetch you fees?
Yes, I think remittances are big and clearly growing area in India. So remittances, payments, I think both of those should be areas that we should look at as revenue sources.
What is the sense you are getting from the regulators? Is it very clear now that all you have to do is to send a call to your Idea phone users and ask them, can I open an account, and it's a yes? Or will it be a little more tedious in terms of KYC?
So other than the KYC, I think the big discussion really is around the use of infrastructure, because the telecom company has large infrastructure, and which bit of that infrastructure is possible to use in what form, whether it's a branch equivalent or whether it's a BC equivalent. I think those are some of the discussions that are going on. I think on KYC already there are lots of things happening. There's eKYC happening. There's lots of discussions on how Aadhaar can be used with or without biometrics as a KYC measure. So I think those are moving at reasonable pace. I think the bigger discussion is, we have this massive network the telecom companies have. How can you best leverage that network without having to replicate it?
The RBI's KYC would be most important, isn't it? If you want to make people open a payment bank account.
Yes.
So over there, what are you expecting? You will be able to match up to the KYC required for a bank?
I mean, clearly we have to. If that's what the regulation is, we'll have to match up to that. We're hoping that we'll make progress with different methods that will allow an easier use of KYC. The telecom companies do a whole lot of KYC. The question is, can we leverage some of that? I think we'll need to do our own KYC. How much of that KYC can be simplified and made more efficient? I think that will be a very key factor in growing these accounts.
Okay, let me now look at the competition. Like you said, probably the unified payment of NPCI is not very big competition. What about competition from these peer-to-peer lending guys? Now Reserve Bank says that they're also going to make rules for peer-to-peer lending. SEBI already is contemplating. Won't that be big competition?
Well, I mean, even if you look at the US, Latha, I think peer-to-peer lending really hasn't taken off and become that big yet. I mean, clearly it's happening and it's growing. It's not that it's not growing. But as a percentage of the total system, it's still small. So I think these are things that will kind of evolve over a period of time, and we'll wait and watch to see how big they are. I think they'll continue to remain reasonably small in the overall context of the Indian financial services system.
You mean even the loan amounts, the ticket sizes will be too small to be a challenge for you?
No, I think the ticket sizes may be comparable with some things that we do through an equivalent of a payment bank. But I just think the markets are going to be very different, and the delivery systems, the service experience is going to be very different. So if you want everything on a single device, and you want to be able to complete transactions on a single device, then the payment bank might offer you a more complete and holistic service proposition than a peer-to-peer lending mechanism. So I think it's a while before the peer-to-peer lending will become significant.
The Reserve Bank Governor has been consistently speaking about looking at allowing the retail digital markets, or rather the digital retailers like a Flipkart and a Snapdeal, to start giving loans as well. Won't that be big competition if Flipkart starts giving loans to the carpet guys from whom they source, or the food guys from whom they source? Won't that be big competition?
So I can answer that question with two lenses on. I think the first is, I think the need for credit is so great that I think there's an opportunity for a lot of people to provide credit. I mean, SMEs today, I think there's a recent survey done, some 12% of SMEs really get access to credit of the quantity and type they want. So there's a large market that's actually underserved, and I think therefore there's opportunity for more players to participate in that. The second, I'm not sure how many of these players would want to build capabilities of their own, and how many of them would therefore tie up with manufacturers of products and leverage that expertise of manufacturing with the customer base that they've built. So they really leverage their customer knowledge, customer experience, and customer awareness and numbers to leverage and use other products, because now that they understand that customer base, clearly they can provide other products. So maybe they tie up with other products, and maybe one of our products could be the product that they tie up with to access their customer base.
Your competition is Alibaba and Amazon. Your competition is Paytm, Alibaba. Your competition is HDFC Bank. Who are all will be your competitors?
I guess the beauty and the scary thing about the digital world is competition can come from pretty unexpected sources. So I think all the names you mentioned are possible people who will compete with us. But I think ultimately this game is going to be a game which is around customer centricity and people who can provide the customer a solution in the way that the customer wants, and therefore that could come from anybody. Therefore it's not possible to say will the competition be X or Y or Z. It's going to be who understands that customer best, who provides a solution best to that customer, and who gives that customer an experience that they're comfortable with. Because I think this industry is really around two things. It's around building trust, and therefore the customer must feel trust with the people they're dealing with. And it's an industry where you have to build relevance and relatedness with the customer. So I think people who do that well, I think will definitely be people who would compete in this space.
You actually said it. For instance, insurance. I mean, who delivers my claims fastest? So
Yes.
whether I buy it from the Idea payment bank account or I buy it from the HDFC bank account, I want to be ultimately served.
Yes.
So over there, who do you think stands? Do legacy banks, do you write them off or do you think they stand a better chance because they have handheld the customer?
So that's why I'm saying it's difficult to write off based on whether I'm a legacy bank or I'm an online marketplace or I'm a peer-to-peer lender. I think it really depends on how you deal with this changing customer. Because I think the big thing that we are seeing is changing profile of customers. We're seeing younger and younger customers coming into the marketplace. We're seeing customers who have the ability to switch much faster than they have before. They have access to much more information than they've ever had before. So the ability to compare products, look at reviews, look at what other people's experience has been is so clear and so vivid. I think a number of factors are changing. So the people who are going to be nimble, who are able to respond to this, I think they will be the winners in this game. So if the banks are able to adjust to themselves and make this change, then obviously they will participate in it as much as anybody else. So I think it's more around behavioral and cultural shifts rather than I think any other position that I would look at as being the people who would win in this space.
Okay. So in any case, if there are so many competitors, won't margins be very thin? Wouldn't undercutting be the name of the game?
So I think price will definitely be a competitive factor. I have no doubt about that. But I think we've seen in many places where the customer experience is good. The customer doesn't look at price as being the only thing that matters. And I think that's why the whole customer experience, the proposition becomes key, because that allows you some pricing power. If you go away from that and use a price as the only basis, then I think you will live in a world of fairly low margins.
Okay. Clearly then consolidation will have to happen. I mean, if you have 21 new banks, 46 old banks, and plus digital marketplace, we are looking at what? At least 100 players, probably as early as in 12 months. Who do you think will liaise? Who do you think will take over whom?
I don't know whether you'll see consolidation in a period of a very short time, but you're right. I think at one level there are going to be a plethora of people competing in this space. Not everybody is going to succeed, and therefore there will be the opportunity for consolidation. So I do think that there will be consolidation. But I think it will really be, again, driven by people who have greater access to customers and a greater ability to build relationship with the customers. Those are the people who are going to have the advantage in terms of building businesses and in terms of being able to acquire people who don't have it. And I think people who have access to customers will look at ways to broaden that relationship with customers. So when you talk of online marketplaces, retail marketplaces, they have a particular relationship with their customer. Everybody is thinking, now I've got this gold mine of a relationship with a customer. What else can I sell through this relationship? And I think that's the way it'll evolve. That people who have access to customers will look at what other products they can sell through. And the people who are able to provide the best experience and the best relationship with those customers, I think will continue to gain.
Well, let me come back to the KYC for another reason. We have CIBILs and some kind of budding credit information even with the MFI sector, but it's by no means complete. Will that make life very difficult? Who will fill that space?
So, I mean, if you look at a place like the US, for instance, I think there's a big group of people now looking to provide online lending to people who don't have adequate credit. There's also a whole business coming up in terms of how people can improve their credit rating and credit worthiness, but let's leave that aside. But just people who don't have an adequate credit history. And I think that will develop in India as well. People who don't have an adequate credit history but actually are reasonable credit. I think people will have to find surrogate ways to be able to assess that credit. And again, I think that's going to be a massive marketplace because India is definitely, the credit ratios are definitely low. And people are not able to access credit because the traditional methods are used. So the more you can use broader information sources to make that credit decision, I think the more people are going to enter the formal credit system. And that's going to happen.
Yeah, analytics, I guess, is what you're
absolutely
thinking of. Are you already seeing startups provide that kind of information, studying your electricity bill or studying your social media contacts and trying to give credit profiles? Are you already looking at that as an input into your payment bank?
So, not specifically to our payment bank, but if I look at stuff that's happening around the US, for instance, and stuff that we're seeing in India today, a lot of models being used. So people are using social data, people are using telephone data, people are using locational data, people are using payment history, people are using contact history, people are using all kinds of different methods. I've seen companies that are actually plugging into an SME's accounting system to be able to figure out their debits and credits, to see where cash flows go, to then get a better sense of the creditworthiness of these people. So I think there are all kinds of models there, and I think some combination of these models will evolve and ultimately take root in India.
Would you say definitely margins are going to crash even for the banking sector, even for this very good private banks you're talking about?
I think margins will come under pressure. I think that to my mind is, I think that is going to happen. I don't think crash is the word I'd use, but I definitely see them coming down.
Okay, so tough times for everybody, but good times for the customer?
But you have to adjust that with the volume increase, right? Because I think there's a number of things happening to increase the monetization in the economy. And I think that's one of the big trends of 2015. You look at the number of steps that have been taken to bring assets, whether from physical to financial, or to bring people who are in the cash economy into the formal economy. Both of those are going to lead to multipliers that we've not seen before. And I think that's so although margins may look like they're coming down, volumes could make up for a lot of that.
So the pie grows larger, you think?
Absolutely. And I think that's the big story in India, if you ask me.
Okay, let's take a break on that note. We then meet maverick entrepreneur KK Jain, who offers small loans through his mobile app.